Hey, welcome back to another weekly review. This week we have Allie in. Allie, you're not normally watching the day-to-day movements of the market and everything that's happened, but Quinn's out today, so you're here and you're joining us
in the hot seat.
And get to take a step out of your planning tax role for a little bit and discuss markets with me. So
yeah,
that's a lot of fun.
I love it. Yeah, I'm always curious and interested to hear as you and Quinn are constantly dialoguing in your office about this earning did this, that earning did that. But yes, don't always get to track them day to day, so it's good to be here. What's new this week? What's going on?
Yeah, so this has been a busy week. One of the first things, right off the top, the Fed coming out Wednesday, and they had their normal meeting, press conference afterwards where they basically said rates are going to stay unchanged. That was totally expected. Now, a lot of the time I hear from people right after a Fed call say, oh, they didn't do anything with rates. Is that what's happening to the markets? No, typically the way the market is affected is, one, if there's a massive surprise. We haven't had one of those in a while. It was expected that there was going to be no rate hikes that happened in this cycle or no cuts that happened. So the Fed came out. More of the press conference is the important part where Jerome Powell comes up. He said, we're keeping things the same. We're going to watch the data. We're going to evaluate. It seems like inflation is a little bit more entrenched. We've seen that through April with some strong economic data that we've had, strong jobs data, things that we've seen over the last 3 weeks that have really caused and pushed the pullback that we've seen in the market. About a 5% move in the S&P 500 downward in April. So we've had definitely a pullback that's happened. But the Fed came out. They said this news. It wasn't too exciting. The initial reaction to the news was that the Fed kind of said, okay, we're doing this, we're waiting for the data, and the market's kind of backed off. So Wednesday, right after that came out, markets sold off a little bit. But Thursday was interesting. We actually had a nice move in the markets upward, and I think what happened is investors really dug into the data. They dug into what Jerome Powell said, and there was one small factor that was really important. So quantitative tightening, which is a term that not many people know about, but we wrote about it in this week's market review, and it's basically the government taking money out of the economy. So for years, the government would do quantitative easing, where they would buy United States bonds out of the market, and they would put the cash into the environment. They put the cash into the economy and basically stimulate the economy. But in recent years, since inflation's been so high, they've been either going out and buying bonds or this massive balance sheet that they've built up from the quantitative easing cycle.
Right.
They've just let those bonds mature and they basically delete them. It's like on a spreadsheet, they delete that cash and that cash is no longer in the economy. So recently, the Fed has had about $90 billion a month. That's the kind of the cap that they would let just mature, and then they would delete and bring it out of the economy. So that was part of their tightening cycle of raising rates and then also doing this quantitative tightening. So now they're backing that $90 billion level off to $25 billion. Now, that's not as big or blunt of a tool as interest rates. Interest rates is like the hammer that the Fed uses in order to determine the way of the economy. This is more of, okay, we're just making subtle tweaks and adjustments. But doing that does show something. It does show that the Fed maybe is a little bit more dovish, maybe easing a little bit more. They're maybe less concerned about inflation, still concerned about it, but less concerned about inflation, which has been coming down, and more concerned about the potential ramifications of high interest rates and a tightening cycle in this economy. So the things could start to fall apart a little bit, and they want to make sure that doesn't happen. So backing off their quantitative tightening means that hopefully they are on the path of starting to ease a little bit more and potentially lowering rates in the future, which is obviously good for markets. That's why the markets reacted the way they did Thursday, and now we're coming into Friday, which has been good as well.
Yeah, so that's big news Wednesday coming into Thursday. And then last night, one of my favorite stocks, Apple, I know had their earnings report. What's the status there? I haven't looked at it yet.
Yeah, so Apple had a really good earnings report for them. Apple's stock has really been beat up, even with some of these other names that have done so well. NVIDIA, Google, Microsoft have done exceptionally well, and their stocks have moved a lot higher in the last year or so. Apple has been kind of a laggard. It has been selling off and had a little bit of trouble with some slowing growth on the iPhone side and some different areas. But they had a pretty good report. They also announced the largest buyback program they've ever done, where they're going to be buying back their own shares, which is a big deal to the degree to the markets. Typically, the markets like when a company announces a buyback program, so that has moved the stock higher. As we are recording this right now, Friday afternoon, they're up about 7%. So the market has reacted to that news and has moved the stock pretty well, which obviously Apple being one of the biggest companies in the world, that has an effect on the overall market.
You said it a lot better than I could have, Logan. I'm glad that you and Quint stay on those things, because sometimes it's right over my head. But
well, and in conjunction with that, with the Apple news, we've also had jobs data that came out this morning. So we have been getting, I mean, you hear us complaining about this. Like, we're getting hot inflation data. CPI data has been high. Yeah. PCE data has been high. PPI data, all of those have been high, which is not good for interest rates coming down. We've also had really strong jobs numbers, so a lot of job growth. We've talked on here, we've talked in our writings about how we don't fully believe all of the numbers that have come from the jobs data, but we finally got a jobs report that was lower than expectations. So 175,000 new jobs created. That's less than the 240,000 estimate of new jobs. So that difference has moved markets higher today, because we finally have gotten economic news that is lined up with what we're seeing, with layoffs that are happening all over the country, with a lot of companies backing off, not hiring as much. We're finally starting to see that in the data, which is positive for what the Fed will ultimately do in lowering interest rates, and positive for the markets overall. So there's a lot happening. It's been a busy week. I hope everybody out there is enjoying the content that we're putting out. Allie, I really appreciate you jumping on and doing this with me.
Thanks for the invite.
One quick thing. She's not going to like me for doing this, but
dear.
Allie, this next week, is going to be on Jack Patty. So you've heard Quint and myself on Jack Patty. Allie's going to be on there. So 5:90 a.m. Allie will be on that in the local Lexington area. You can also find it online if you look up Jack Patty. She'll be on at 9 a.m. on Tuesday morning. 9 a.m. on Tuesday morning. So check her out there. Hope everybody has a great weekend. Enjoy the Derby. Make it a great one.